Hello ladies and gentlemen, this is a video going over a strategy that I intend on putting on Monday. I'm going to look at the price action before market open on Monday, and we're going to see if we can launch the strategy. It's on ticker symbol NVDA, that's NVIDIA, and the strategy is a bear call spread. So let's dig in and see exactly what's going on. First, I like to look at the chart for NVIDIA, and let's go to that ticker symbol NVDA. All right, so NVIDIA has, on the daily chart, has been supported by the 200 EMA for a long time, and then we broke below it, during the beginning of this year, and we kind of flirted with the 200 EMA, and now we're definitely below it now. So I'm looking for the 200 EMA to come in as resistance because it was previously support. With that being said, we can also see that we are in a downtrend channel, this purple downtrend channel in NVIDIA. So we have reasons to believe technically that NVIDIA can receive some pressure. Another thing to note is, let's look at the VIX down here at the bottom, the VIR. This is like a little graph displaying the volatility of NVIDIA, and you can see that right now IVR is super low, and when IVR is low like this, we can expect an expansion at some point. So it's got to breathe. So if we do see that expansion, then IVR will go up again. And when IVR does go up, typically we'll see selling pressure. All right. So what I'm going to be looking for is for IVR to expand and for us to see some selling pressure with NVIDIA. All right. So how do we play this? What approach can we use to play this? Well, first of all, we need to, look at the option chain here. And if you see an option chain, we've got a monthly contract coming up on December the 16th. I think that's a perfect time to play it. It's right before the holidays, and we're not going to be dealing with the movements before New Year's and the holidays. Instead, let's go ahead and get in this thing and out of this thing before all of that. So I'm selecting the December 16th expiration, and very rarely would I let a contract go all the way to expiration, unless it's like a zero DTE play, or maybe some kind of short-term play, maybe more like a lottery ticket play, things like that. But very rarely would I just let it ride to expiration. I'll try to collect some of that premium, maybe halfway or ideally a third into the contract. So I would love to go ahead and collect it on December the 2nd. All right, so if December the 2nd is when I like to be in and out of this thing, so I'd like to be in on Monday, December 2nd be out, I'm gonna want to know what the expected move is for that date. So if I go to the December 2nd contract here on Tastyworks, we can see that our expected move is this zone here, where you have the blue line here, 172.50 and then 152.50. So you've got about a 20-point wide expected move, 10 points on each side of the current price of the underlining. So let's say 172.50 is our upside expected move, which that's what it is for December the 2nd. How does this compare with our EMA that we see here? Well, the EMA is at 170.83, so we're well within that 172.50 area. If you look at the downtrend channel, we're around 180 for the downtrend channel. So you know, that would be an extreme jump above current price if we do test this downtrend channel. But what I'm you know, betting is that we stay below the 200 EMA. You know, if we don't stay below this, then I'm going to have to look at some areas where I'd like to just be out of it, out the trade, you know, if it does go that far against us. All right, so we kind of have some prices to work with, you know. Let's go ahead and look at the option chain. So let's pull up option strat. In this particular strike price at 190, selling a call at 190 and buying a call at 195. You know, if you chose to, you could also expand this to a 10-point wide spread. But I prefer to use a 5-point wide spread. I like the risk to profit ratio for the net credit and maximum loss here. So I'm going to go with a 5-point wide spread for this particular trade. All right, so if we do have deltas right around 10 at the 190 call and 195 call, so we got a 5-point spread and we've got a 90% chance of profit. If you want it to go real consistent with where that resistance was showing with the 200 EMA and downtrend channel, we could go with a 175, 180, and you've got about a 1 to 3 risk to profit ratio here. Well, it's a little more than 1 to 3, but our net credit is 108, maximum loss is 392. All right, so notice that this slider here displays your curve depending on the date. So this is at expiration, and this is before expiration as we slide to current time, which is now. All right, so that's our curve right now. Let's go to December 2nd. All right, I like to hold this no more than a third into the contract life. No more than a third into the contract life. So that means getting out on December 2nd or sooner. And what I like to do is accomplish a third, at least a third of the net credit. If we accomplish more than that, if we can collect more premium than that, then that's awesome. But I like to get at least a third of my maximum profit or net credit. Okay? In this particular strategy, this is what I like to do. So I've got a 74% chance of profit at expiration for this strategy. You know, we can put this on and just look at what price action it may do. Now, let's prepare ourselves for any downside move here. If we do get a downside move, let me refresh this, make sure we're getting the right numbers here. NVDA, December 16th. Let's go down to up to 175 and then 180. All right. And then let's bring this down to December the 2nd. Okay. So if we do get a downside move to 170, then we're down 58 bucks. And that's on December the 2nd. Keep that in mind. All right. And if we do get it up, I'm sorry, I'm in an upside move to 170. We may be down around 50 bucks. If we get a downside move down to 152, then we'll be up around 80 bucks. That's over half of the premium, the net credit. All right, so you know, this strategy looks really good. I like the risk to profit here, and I like the chance of profit here. I think it can render a really good yield, or return on investment. So, you know, I would like to put this strategy on Monday, considering that the pre-market conditions look fitting for that. You know, some key things that we're going to be looking at is the VIX, the volatility index. If we go and look at the VIX overall, we want to see some strength in the VIX to see that the overall market is potentially going to be selling off on Monday. So we want to see that pre-market strength in the VIX. We can look at futures. Those are some things to indicate what the market could do upon open. And also, we can look at the IVR of the actual underlining of NVIDIA, and you can see that we've got some IVR super low right here with NVIDIA. And if we do see some expansion with IVR, then that will definitely indicate that some selling pressure should be setting in with this. So our bias is definitely to continue within this downtrend channel. We're at the upper end of a downtrend channel, and then we're also underneath 200 EMA. So we're looking for some pressure to set in with NVIDIA, and we're patiently waiting for some upward momentum and volatility so that the pressure will correlate and set in to the downside. And we're playing this with some flexibility, where we've got our strike at 175 and 180. And this gives us a lower probability of profit compared to, let's say, a 190. And 190 will have like a 10 delta here, and then 195. So 190, 195 spread. We've got a high probability of profit. We can collect 27 bucks. If price action does go down to, 155 even, we're collecting the majority of that net credit on December the 2nd. So some people may prefer to play this with a 10 delta here, which is not a bad play at all, because if we do go up to our 170, even 175 area, we're only losing right around 44 or 45 bucks. So this is a smaller profit, but you will have to put up more capital, and you will have a higher chance of probability. So I think all in all, this is these are just two different approaches depending on what your risk appetite is, and they definitely both can work very nicely and very easy to manage. Definitely I would encourage getting a subscription to Option Strat, and then it wouldn't hurt having a subscription to TradingView as well, so that you can get very granular with looking at price action and candlestick charts, and also have plenty of tools to really know what your underlining is doing. And this will definitely help you make better decisions as you navigate the market and look for conservative ways to build a fortune. Thank you very much for tuning in. Be sure to reach out to us and express your interest in joining our group so that you can take advantage of live trading alongside seasoned investors, so that we can help each other be successful in this market. Happy holidays, everyone, and thank you for listening.